Decided to make some changes to economic message to father to son. We wanted to, this page is for to get information, mainly, to my kids and whoever else might be interested. And so I decided to have my kids ask me a question a day of what they, what's important to them right now in the financial market and what they may be learning or what they may want to know, and they can learn from my father. So what I'll do is I'll just kind of read what their question was, and I go over, what my answer, is. So the first one is from my youngest son. What is the most important things to consider before I buy something in the stock market? The first thing you should probably do is go open up a brokerage account. I like Charles Schwab, not just because of their trading platforms, but I like the information, the research that they give you. They have really good reports from several different companies. One of my favorite being the S&P report and the information that goes over individual stocks. So that's the first thing that I would do. The second thing that I would do is I would go pick up the Culmination, which, as you know, is a book that me and one of my friends wrote that goes over our 30 years of being investing in the stock market. So that would be the second thing that I would do. The third thing that I would do is I would think about what is it that I use in my life, companies that I use in my life. Because one of the most important things in investing is that you have to understand what it is that you're investing in, and you have to believe in it. And believing in it, the most important part of believing in it is once you've done your research and you come up with the idea that you have, as the stock falls, your emotions may be a little removed. So as it falls, you may start buying and not selling and think that you made a mistake if you believe you know your company and you believe in your company. Like, I know you're real big on social media. So I would start with Meta. There's two parts to that. I would start with Meta. It was just a social media company. It just so happens to be one of my favorite companies I like investing in at this time. So now that I've identified a company, I would go do research, which goes into my oldest son's question is, are you looking at company 10Ks, quarterly reports, etc.? Clearly you've been doing this a long time. So if you do use those documents to inform your decisions, what specifically are you looking for? So I do use the 10K. So that would be the next step that I would do after I found the company I identify. I always start with their last annual report. In their last annual report, the CEO is normally going to give you the status of where the company is at now and what they're looking to do in the future. So that's a good start. I wouldn't pay too much attention to that or overuse that as an investment, because all CEOs is going to somewhat talk positive about their company. But the most important part is the balance sheet, the income statement, and the free cash flow, which is all included in the 10K, which the 10Ks are normally your quarterly reports. So, but I always start with the annual report to make sure that I like it. And in that balance sheet, I would be looking mainly for how financially sound they are. Do they have a lot of debt? Do they have a lot of cash? Because you don't want to invest in a company that has too much debt, or they may be, in financial trouble. So it just so happens Meta is a well-ran company, very, very financially strong. They just announced a dividend that I believe it'll cost them $5 billion a year. They make buku money. They buy back. They just did a stock buy. They announced a stock buyback of $50 billion a year. And as you know, you use Instagram mostly. You use it a lot. So you obviously like their product. So that's would be how I would start. I would also look at, do you got a phone in your hand? Is there any wireless services that's out there? And that'll be a bonus that I'll give y'all later on in the thing. So I do read the annual report, and I do glance over quarterly reports. But once I made my decision that I like them that they're financially sound, I don't have to read the quarterly report in too much detail. As long as I see that they're not adding too much debt, I would just be mainly reading, are they profitable? What does their income statement look like? What is their cash flows? So that'll be a quick glance, which won't take you too long. You're just mainly just watching over the company and watching over your investment. So the 10Ks are something that I do read. So my middle son asks, if you were early in your professional career, would you be more risk tolerant or remain committed to Culmination and your strategy? That's actually a really good question. I did a video maybe about 2 weeks ago where I said you should invest. If you have $1,000, you should invest the same way that you have $1 million. And the reason why I would stick to the Culmination is really going to give you everything that your father learned over 30 years of investing. And I made him a lot of mistakes. I've tried everything. I've tried penny stocks. I've tried buying and selling, buying options. I've tried trying to invest in super undervalued companies that's going through temporary problems. I've tried just everything. You name it, I've tried it. And I've tried speculative companies that I believe that gonna have super growth in the future. And in almost many of those cases, I took a loss. You know, I had some wins and I had some losses up until this point. But what the Culmination has done for me is mainly it gave me patience to where I'm not just trying to invest. One example is if I didn't have the Culmination today, and right now as the stock market is at a high, I believe, and I believe the stock market is completely overvalued right now. So as I do come up with cash, instead of looking around for an investment, what I do right now is I just buy T-bills. You know, they're earning a little over 5%. I'm comfortable with that 5%, and I actually believe that the 5% is going to outperform the market. I mean, the market may go up 10% from here, but I believe when it falls, you know, which is going to create opportunity for me. And also, when you have that money in T-bills and you're not always fully invested, you're not riding that wave down, which I've done that several times, and that's not very fun. So because you're riding it all the way down, and then you got to ride it back up. And you know, and that may take a while. But if you got capital on the sideline, and as those times come, which comes very often, his girlfriend had a question that I'll answer because it goes along this line. Do you believe in efficient market or inefficient market theories? I believe in efficient market theory. I believe in most cases the stock market is at equilibrium, and it's basically saying that that the stock market is trading at the price that it's trading at with all known information. But the good part, what the efficient market theory does not include is every once in a while there's going to be times where people are over exuberant and they get irrational to the upside, and then also they get fearful on the downside, which creates the real big opportunities when you really can make money. And if you have quite a bit of money, like right now I'm about 50-50. So if you got quite a bit of money, I'm 50% bonds, 50% stocks. So I got a decent amount of money on the sideline I have in T-bills, earning the 5%. And also one of the things about, if you read in the hedge funds, one of the things you're going to know a lot about hedge funds is that a lot of times they don't beat the stock market to the upside. Warren Buffett is a really good example of this. They might not always consistently beat the market to the upside, especially when we get in overvaluations the way we are now. But when the market turns down, they normally going to perform far better than the overall market. So like with me being 50% T-bills, 50% stocks, and my favorite stocks that are long-term investments, because she also asked, are you a tactical investor or a strategical investor? And I'm actually a strategical investor. Whenever I buy into a company, I plan on never actually selling that company. So it's important for me to get a really good price and have a really good company. And I've been able to, I think it's pretty easy to identify, especially I mainly focus only in America. So to me, it's pretty easy to identify, some of great American companies. But it's what's the price that you pay? Do you overpay or do you underpay for the stock price? So when the stock market has a really good downturn, I'm going to deploy all my capital in the stocks that I like. I may purchase some shares of stocks that I already own, or if I have a really, really good idea. And one of the things that I will strongly recommend, once you identify a company, and I put Meta in that category, when we get a really good downturn, a really good strong downturn, example would be Meta went from 384 to 90. And I started investing in it at 250, and because I believed in Meta, as it kept going down, I kept buying more, so I was able to pick up some at 90. Only thing I wish, because that pitch was straight down the middle of the plate, I wish I would have swung my bat a whole lot harder. And I swung hard for it, and I got a good hit. But obviously now that it's selling at today, I believe at like 470. I wish I would have bought a whole lot more.